Money, your stories,
your freedom.
The Peter Schiff Show.
Welcome, everybody. Peter Schiff here. Finally, gold is making a new record high. You know, it made a record high yesterday, too. I just didn't notice that the rally put it in record territory, but it is. And, you know, it's interesting. I was watching CNBC yesterday when they were reporting the new record high in gold, and they said today gold made a new nominal high. Why do they say nominal? And especially in the same sentence, the broadcaster said gold made a new nominal high. The Russell 2000 hit an all-time record high. Well, why didn't they say the Russell 2000 hit a new nominal high? Because adjusted for inflation, even the government CPI is nowhere near where it was the last time it hit the high. So, it's nowhere near where it was 10 years ago, adjusted for inflation. So why is it just gold's highs that are, qualified as being nominal? I think it's because the financial media still wants to discourage people from buying, discredit the significance of this gold move. And what a lot of people don't realize is that gold went to 800 for like a nanosecond. I think the entire amount of time that gold might have spent above 600 was just a matter of months. I think it was a quick spike up and spike down. So this gold market is a bull market that's been building for 10 years. Gold has gradually moved. So if you look at the sheer dollar amount of gold that's been purchased at these prices compared to the small amount that got purchased up around anywhere near 800 or 700, this is a new high, even if you don't probably adjust it as far as the amount of money that's going into the gold market. But certainly at some point we will hit a high, even adjusted for inflation, but that's still quite a bit higher. It's going to be, well over 2,000. Now, I'm sure when silver breaks above 50, right now it's about 39. It's a new 31-year high. When it gets above 50, again, they'll say silver has a new nominal high. I mean, it's really going to have to get up there to get an inflation-adjusted high. What else is going on today? The gold stock index, the Huey, is one of them. There's also the XAU. The Huey is the non-hedged, although now pretty much they're all non-hedged. But I think the Huey is a better reference point for the performance. That index is now above 600 for the first time ever. It's at 605. 10 years ago, that index stood at 50. 50. So in the last 10 years, the index has gone from 50 to over 600. Over 600. Yet very, very few mutual funds even own any gold stocks. And the media still doesn't appreciate how much money has been made by gold investors and people who have bought gold stocks. Now, in March of 2008, before the financial meltdown, the index stood at a high of 519. So it's now 100 points higher than it was before the major market meltdown in 2008. The Dow Jones and the S&P are still considerably lower. Now, of course, during that meltdown, gold stocks fell more than the Dow. The Huey went all the way down to 150. That was a huge decline, 70% decline or more. Had a much bigger decline than the Dow. Yet it's had a far bigger rally. And I remember, when we were getting a lot of heat back then because we own a lot of gold stocks, and so our accounts did worse for having gold stocks than other people's who didn't when the crash happened in 2008. But look at it now, right? Who would be better off, somebody that held gold stocks or somebody that had the Dow? Well, certainly there was more volatility in the gold stocks, but it's not the hare that wins the race, but the tortoise. The point is, where are they now? And what happened in 2008 was the head fake. In fact, everything that happened in 2008 made gold a better buy, made silver a better buy. It's just that when everybody was throwing these stocks out the window, it was simply a rush for liquidity. So this is a huge move. Now 600, the chart looks very, very good in my opinion on these gold stocks. So I think this is, 600 is not going to be the new high. I think we're going quite a bit higher in this index. The dollar across the board, except for the yen, the dollar is lower. The dollar is at a new 52-week low against the New Zealand dollar. The New Zealand dollar has now gained back everything that it lost as a result of its earthquake, which was pretty severe down in Christchurch. The Canadian dollar is at a 52-week high against the U.S. dollar. The euro is at a 52-week high against the U.S. dollar. The euro is 142.5 Now, the yen is down. The yen continues to fall. Obviously, it's falling against the U.S. dollar. It's getting decimated against all the other currencies. So think about this for Japan. Japan is a large importer of oil. They import 100% of their oil, right? They don't have any oil in Japan. Oil prices are over $108 a barrel. They're making almost at a new 52-week high. But for the Japanese, the price of oil is skyrocketing. Now, think about that. Why is it good for the Japanese economy to have to pay 20% more for the oil that they need when they import it all? And they're going to need a lot of oil. If the Japanese hadn't acted the way they did, oil would have gone down for the Japanese. It would have been cheaper. Now the cost is going through the roof, as are the costs of everything else that they want to buy. How is this a positive for Japan? Now, I know what's going to happen is Japan's GDP numbers are going to be higher because of this weaker yen. But, of course, that's because you measure the GDP in yen. So, yes, the GDP goes up, but the yen is less valuable. So the real Japanese economy will be contracting, even as the GDP will show a bigger increase because of inflation. Now, also, I think a lot of people are going to start to see the big increases in consumer prices that are going to hit Japan probably by the end of the year. And I think by next year, you're going to have a very high inflation rate in Japan. That's going to be greeted as a good thing. Hey, after 20 years, we finally defeated deflation. Yes, after 20 years of getting good deals, of having stable to lower prices, the Japanese are now finally going to be able to breathe a sigh of relief because they'll be able to pay more for all the things that they want to buy. In fact, they're going to be paying a lot more. And one of the things that the Japanese really like to do is travel. They are some of the biggest world travelers. I mean, if you ever go anywhere, you always see Japanese. Think about how much more expensive traveling is now going to become for the Japanese. Anywhere they want to go, it's going to be much more expensive. So this is nonsense economic policy. But unfortunately, all around the world, there is so much ignorance about economics. And it's a complete consensus. I mean, whenever there's a problem, debase your currency, print money. That's always the solution. That's the solution that our politicians have, which is how I know that the country is doomed economically. Because all the people in charge, everybody that has any kind of clout in this country, whether it's in government, whether it's on Wall Street, they all have the same opinion, and it's wrong. Imagine, would you want to go across a bridge? Let's say a bridge was built by people that knew absolutely nothing about structural engineering. Would you want to go across that bridge? No, of course not. Well, we've got an economy that is built on a foundation of these economic props that were placed there by people who know nothing about economics. And everything that they're going to do is going to be wrong. And we already know that. So they're just going to make one mistake after another. And, I saw these guys on CNBC today, Abby Joseph Cohen, very, very overrated Goldman Sachs analyst. I think she's a very, very poor prognosticator. She has a bad record as far as I'm concerned, and she doesn't seem to understand economics. Yet, she works at Goldman Sachs, a firm that would have gone bankrupt without government bailouts. Where was Abby Joseph Cohen if she's so smart? How come she couldn't have kept the firm from going under without government support? But she said that she thought Ben Bernanke did a phenomenal job, an outstanding job. He was doing a great job. Anyway, I'm going to continue after the break and talk a little bit more about her comments and a few other comments after the break. So don't go away. You're listening to The Peter Schiff Show on SchiffRadio.com.
Don't give up, it's the fire inside you. Let it burn.
Yeah, and if I'm ever at the crossroads.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
Welcome back to Schiff Radio, on Peter Schiff Show, on SchiffRadio.com. I was talking before the break about Abby Joseph Cohen's appearance today on CNBC when she praised Alan Greenspan on what a fantastic, or rather Ben Bernanke, on what a fantastic job he's done. Of course, she used to praise Alan Greenspan in a similar manner. And of course, we all knew what a horrific job he did. But anyway, one of the things that she said was she admitted that she thought we've seen the lows in inflation and that inflation is going to pick up, but that only a little bit and then it's going to stop. Well, how the hell does she know? Why would it stop? It's kind of like there's a ball that's rolling down the hill and you just look at it and say, oh, that's okay, it's because it's only going to roll a little bit, and then it's just going to stop. Well, why would it stop? I mean, wouldn't you assume it's just going to continue to roll? After all, gravity doesn't just stop working. So if a ball is rolling down a hill, it's more likely to continue to roll down than to just, come to an abrupt stop. I mean, maybe there's something in the road that it can get snagged on, but is there something that she knows that the market that doesn't, that somehow that all this inflation is going to be stopped? And the problem is that much of the inflation, at least the way the Fed looks at it, the CPI numbers, that's already in the pipeline. So the higher CPI numbers that we're going to be seeing at the end of this year and next year, that's the result of the inflation from a couple of years ago, right? By the time we start to see the results of inflation that we're creating now, it's down the line. I mean, they knew this when I went to school at UC Berkeley, which again is not, it's a pretty liberal economics department, but they even understood that monetary policy operates with a lag when it comes to prices. And so they had the analogy was a man in a shower. And I'll give you that analogy if you never heard it, because it's very appropriate. When you go into the shower and you step in and the water is too cold. And so you turn it up a little bit and it's still too cold. So you turn up the heat a little bit and it's still too cold, and you turn it up and it's still too cold, and you keep turning it, and then all of a sudden it's scorching hot, right? That's because there's a lag between turning up the temperature and the hot water coming out of the faucet. Well, there's a lag on monetary policy. So the Fed keeps printing money, and they look at consumer prices and they don't see them rising, so they think they can print some more, and they keep printing more, and it takes time before it happens. And by the time it happens, it's too late to do anything about it. And then, when you're in the shower, you turn the heat up, it's too hot, right? And then you quickly turn it the other way, it's still too hot. You keep turning it, and then all of a sudden it's ice water. Right? It's the same thing. The Fed never gets it right because they don't get immediate response from what they're doing. There's a lag, and they don't know how long the lag is or how big the lag is. So to think that the inflation is just going to stop on a dime, it's preposterous. There is no precedent for that happening. Now, what the Fed says is, well, we'd rather err on too much inflation, because if we tighten too soon and we're back in recession, we can't undo that. It's damage. But if it turns out that there is a little bit more inflation than we thought, well, we'll just quickly fight it with rate hikes. But you can't do that because the economy is more levered up and more vulnerable, right? I mentioned yesterday that the Fed had to borrow about $700 billion in March, and probably the lion's share of that was funded by the Federal Reserve. If the Federal Reserve was tightening monetary policy, not only would it be not buying any of that $700 billion, but in order to tighten monetary policy, it would be selling some of the treasuries it owns out of inventory. So if the Federal Reserve, if the Treasury is selling, massive amounts of treasuries, and the Federal Reserve is selling treasuries, who the hell's going to buy them? I mean, no one's going to buy them at these interest rates. And if interest rates went up 100 points, 100 basis points, still nobody would buy them. They're going to have to skyrocket. And if interest rates skyrocket, the economy is going to tank. Now, the Federal Reserve knows this, so of course it's all a bluff. Here comes oil prices now rising. I just noticed that oil traded above $109 a barrel. So this is a new high for the move. In fact, for the contract, it's a new contract high since the front month contract, the May 2011 contract has been trading. So this contract didn't exist back when oil was 140, I think. Or actually, probably it did exist, but my quotes don't go back that far. But it probably had very little open interest. But this is certainly a 52-week high, if not a 2-year high, 2.5-year high in the price of oil. And again, as I said earlier, the Japanese, if we think oil prices are rising here, they're rising much faster now in Japan. Now, they're rising more slowly in Europe. They're rising more slowly in Australia. In fact, I actually read an article about Australia talking about all the benefits of a rising Australian dollar, that because the Australian dollar was rising, that it was going to keep inflation in check, and so the Bank of Australia would not have to raise interest rates. And they were very happy to have a stronger Australian dollar to restrain inflation. Yes, they get it, right? Maybe Australia gets it. Why does anybody else get it? That if you have a stronger currency, it's good. And ultimately, a stronger currency leads to lower interest rates legitimately, not artificially, because if money isn't losing value, then savings have a better return. People are more likely to save. You have more savings, and you don't need as much interest on your savings if your savings are holding their value, so you have lower real interest rates. It's when you have an inflationary economy, it's when you have cheap money, that interest rates are high because nobody wants to save and no one wants to lend unless they get a high interest rate to offset it. And so what has to happen to maintain low interest rates with a weak currency, the only way you can do it is to weaken your currency more, because it's a central bank that artificially supplies that cheap credit, and the result is disaster. The result is going to be this massive inflationary collapse that we are going to go through. Now, the ECB is going to be putting up an announcement tomorrow, I guess, is their announcement on what they're going to do with interest rates. I would be very surprised if the ECB does not raise rates. Now, I think what would be a surprise is if they raise more than 25 basis points. They should, but they probably won't. They should do at least 50. And I'd say there's a slim chance that they might do a 50. But more likely than not, they'll do 25. But they'll do 25 the next time they meet. I don't know how all these global central bankers got together one day and decided that the only way you can raise interest rates is 25 basis points at a time. Because often that's too slow, and whatever inflationary problem you perceive, it's not actually addressed by raising rates 25 basis points at a time. Especially if you're telegraphing that, especially if you're letting the markets know that you're only going to raise them 25 basis points at a time. And unfortunately, that's what the central bankers tend to do. So we'll see what happens with interest rates, and I'll talk about it on tomorrow's show. Meanwhile, the gold prices continue to make these highs. The CRB is not quite at a record high, but it's almost back up there. It's up 1.6 points today. We're at 300, just under 365, 1 or 2 points. We'll probably hit a record high in the CRB, or not a record high, a 2.5-year high, probably by the end of the week. And we've got those comments from Walmart's CEO about how bad inflation is, and he's basing it on the price hikes he's already seen based on rising commodity prices from last year. Anyway, don't go away. We got a guest coming up after the break. You're listening to The Peter Schiff Show on SchiffRadio.com.
We now return to The Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, The Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff on SchiffRadio.com. Joining me now, my guest for the half hour, Robert Alt, who is Deputy Director of the Heritage Foundation Center for Legal and Judicial Studies. And what we're going to talk about today is the overcriminalization, all of the acts that have been turned into criminal that would be better to remain civil. And in fact, the federal government is now involved in all sorts of crimes well beyond the intent of the framers. If you look at the Constitution, there are 3 federal crimes: piracy, treason, and counterfeiting. And I'm talking about legitimate counterfeiting, not what Bernard was accused of or convicted of. Those are the only federal crimes. Robert, how is it that the federal government is involved, has made so many actions criminal, and how come the prisons are full of federal convicts?
Well, that's a great question. As you suggested, I mean, in the early days of the Republic, we had a very small number of federal crimes. We had a very small number of state crimes as well. We did a study about 2 years ago. And it's interesting, if you tried to go and count how many federal crimes there are, if you contacted the Department of Justice, they would not be able to give you an accurate count. In fact, former Attorney General Ed Meese, Reagan's Attorney General, who I worked for here at Heritage, he headed up a task force for the American Bar Association in '98, and they essentially conceded that there was no accurate count. They tried to come up with a best estimate. We built on some of the research they did, and we were able to find 4,500 federal crimes spread throughout the code, but that was just the tip of the iceberg. because those are the crimes that Congress has passed.
Right, and you're talking about the crimes that are basically listed in Title 18 or the U.S. Criminal Code. You're not, because there's
those are in Title 18, and they're spread throughout because, unfortunately, Congress passes crimes in a very haphazard fashion. So, for instance, the Dodd-Frank Financial Regulatory Bill, they just go ahead and throw in crimes for various provisions within there, and those get smattered throughout the code in other areas.
But where does the government get the constitutional authority to establish these crimes?
Well, once again, this is, I would argue in many cases, in fact, they don't.
Yeah, because if the Constitution specifically says these are crimes that the federal government is authorized to prosecute, that means that the founders were enumerating what they considered to be a federal crime. And if it's not in the Constitution, they were not delegated that authority. So at best, they could have civil penalties for violating government rules, but they have no authority to have criminal sanctions. It's just not in the Constitution.
Well, there are a few areas where they have more general authority where they could. Let me give you an example. For instance, insofar as they have the authority to set up the postal roads and post offices, they presumably would have the authority to create mail fraud crimes. That would be, while it's not expressly in the Constitution, that would be a legitimate use of their authority. However, they've gone well beyond that kind of a simple, gee, we have the authority to do this, so we should have the authority to regulate it, to where, they rely generally on the Commerce Clause authority to believe that they can actually criminalize just about anything.
I mean, I would say that they would have the ability to impose civil sanctions for mail fraud, that states could decide that we're going to impose a penalty for tampering with federal mail. But since they put the post office into the Constitution and they were enumerating what the framers thought were crimes for the federal government, why didn't they put postal tampering with the post office? They could have put it in there. I mean, they didn't.
They could have put it in there, but generally speaking, insofar as they gave them the general authority with regard to that, it's seen that they would have the authority to regulate in a criminal matter there. But again, I mean, honestly, the space between us on this question is relatively thin, I think, because most of what they do based upon a theory that somehow the Commerce Clause gives them plenary authority to regulate in a criminal matter every feature of your life. Of course. And at that point, that's just, there's no support for that.
Yeah, Obama.
And in fact,
the Obama, they're appealing the decision on throwing out Obamacare, and their argument is the Constitution gives us the right to regulate interstate commerce. I mean, the way that is basically interpreted, we didn't even need a constitution. Basically, we gave unlimited power to the federal government. We created a government of absolute and unlimited powers just because we put that little Commerce Clause in there. And obviously, there's no way the framers would have done that.
No, and if you take a look, there's I used to teach a class in law school on how to interpret statutes, legislation. And one of the first things you teach students is you don't read either a statute or a constitution in such a way that it causes words in it to be made meaningless. So if you're reading one clause in such a way that it makes you sort of it makes everything else surplusage, it makes it as if they didn't really need to write that, then you're probably reading it incorrectly. And the bottom line is, if the Obama administration's interpretation of the Commerce Clause is correct, why is it, they spelled out all kinds of, very minute authorities that Congress had, including, we talked about, to establish post roads, to coin money, to...
right, and coin money means take gold and silver and make a coin out of it. It doesn't mean take paper bill money and print it.
So they talked about all these various authorities that Congress had. If, in fact, the Commerce Clause was as broad as what it is that they say it is, then all of that is surplusage, because all of that would be covered under Obama's interpretation of the Commerce Clause.
Right. According to them, the Commerce Clause says the federal government can do whatever it wants, because everything in some way relates to commerce. I mean, they even regulate, and even if it's not interstate. Right? Why did they call it interstate commerce? Why didn't they just say they can regulate? Why even use the word interstate? Why just say Congress can regulate commerce? They qualified it by interstate commerce.
Well, and of course, the word commerce itself is interesting. I mean, you take a look at the Obamacare litigation, and of course, in this particular case, the claim essentially is that they can it's not merely that they can regulate commerce. They can regulate individuals who are not in commerce. They can force you, if you have not purchased insurance, to purchase insurance, to enter into a market.
Right. They're forcing you to engage in commerce when you weren't even engaging in it.
That's correct.
Yeah, the whole thing is ridiculous. But another thing I read that you are concerned about, and I am too, because it hits close to home with my father, and that is the diminishment of the importance of mens rea or intent when you violate a law. Now, when my father was charged, and he's in federal prison now for tax evasion, the government would not allow any evidence or any witnesses to testify as to my father's state of mind or his beliefs. There were 2 psychiatrists, including one that was hired by the government itself, that examined my father and determined that he believed, without a shadow of a doubt, that the law did not require him to pay income taxes and that nobody would convince him otherwise. The testimony of those psychiatrists was they were not allowed to testify. My father tried to introduce evidence such as the books that he had written, the court cases that he had read, so that he can show the jury the basis upon which he formed his beliefs to not pay taxes. The government did not allow any of that evidence or any of those witnesses to testify. So anything that might have shed light to the jury on my father's intent or motivation was kept from the jury. And I'm sure that it's not just, this might be happening in other cases. And basically, they say it doesn't matter what your intent is or what you believed. We're going to turn a civil thing. And if they were going to go after my father, it should have been civilly. But they turned it into a criminal prosecution, even though there was no crime committed.
Well, you take a look. And unfortunately, with regard to federal crimes, with the erosion of mens rea, and many federal crimes don't require any knowledge that you're doing something unlawful or any intent to do something unlawful.
Right, but when it comes to taxes, it's specifically in there. It has to be willful. I mean, it's in the statute.
So, unfortunately, if you take a look at regulations in particular, oftentimes it doesn't require any knowledge whatsoever.
Anyway, don't go away. We got more to discuss on this topic. You're listening to The Peter Schiff Show on SchiffRadio.com.
How to live my life when you never felt the pain.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back. This is Peter Schiff with my guest, Robert Alt, talking about crimes, federal crimes in particular. Robert, the United States, we have more people in prison in this country than in any other country in the world, and that includes China. I mean, China has 4 times our population, yet we lock up more Americans than the Chinese locks up Chinese, and they're a communist country. We're supposed to be free. I mean, are Americans just are we a nation of criminals, or do we have too many laws?
Well, there's no question we have too many laws. I would. We lock up way too many people. I generally dispute the Chinese number only because I don't think that their Bureau of Prisons, the equivalent of their Bureau of Prisons numbers are accurate. They don't tend to.
What about India? We have more people locked up than India.
Well, no. India's numbers are more accurate, but it's one of those things. Oftentimes people toss out the China number, and they don't tend to mention things like political dissidents who they lock up and the like. So I would just be careful about using that number. But no, the problem, we do lock up way too many people. If you take a look, and we're spending way too much. If you take a look, in 1986, the Bureau of Prisons, their yearly budget was $220 million. For 2010, we're up to $6.8 billion.
And is that a combination of all? Is that federal, state, county, or?
That's federal.
That's federal. Yeah. So you're not even talking about what it's costing to lock up everybody else on all the county jails and state penitentiaries.
Yeah. So in terms of that, and obviously the vast majority, if you take a look statistically, the vast majority are in state prisons. Because again, most crimes actually, and most crimes that are committed are state crimes, and those are the ones that you're actually much more worried about. I mean,
what percentage?
Obviously, the rape, murder, robbery, that sort of thing. Most of those prosecutions are handled at the state level, and those are the ones that we're actually most people are more concerned about.
Does the state handle the drug crime? Is that always federal when it's drug related, or do states also?
Not always. Not always federal, although the drug crimes constitutes a substantial amount of the federal docket. There are state drug crimes, but that varies obviously from state to state.
Yeah, I think what's also probably an important statistic is many of the robberies that are committed are actually being committed by drug addicts who are trying to get money to buy illegal drugs, which are very expensive only because they're illegal. So a lot of that crime is a direct byproduct of the federal war on drugs.
Well, you've got, you've taken a look, actually, a number of states have gone to programs such as drug courts, which some of them actually permit not only drug offenses to be tried there, but also drug-related crimes. So if it's seen, for instance, that a robbery or something is committed by someone and it's believed it was because of an addiction, they've looked at alternative prosecution.
What would have been interesting would have been if California had passed that proposition to decriminalize marijuana. What would have happened between state and federal authorities? Would the state police have prevented federal agents from coming in and arresting their citizens for possession or distribution of marijuana?
Highly unlikely in terms of that. I mean, it would have been interesting to see what would have happened, but one of the questions is obviously the Obama administration has taken the position of not enforcing federal drug laws in states that have medical marijuana laws on the books.
Because I've said if California decides it's legal to have pot, and if somebody decides to grow pot in their backyard and smoke it, clearly they're not engaging in commerce. Clearly nothing's going interstate. By what authority could the federal government break into that guy's house and say you can't grow pot plants in your backyard?
Well, in that regard, there's old Supreme Court precedent on that point going back to the 1930s, and the theory behind it is aggregation. That if you're growing a commodity that's sold in interstate commerce, and Congress has the authority to regulate the interstate transportation of that, they can regulate an individual interstate instance of that, and
which is complete.
The Supreme Court
that's a lousy
upheld
decision.
That just recently.
Yeah, well, that's a horrific decision because it basically says that if I decide to make furniture in my backyard, I'm engaging in commerce. If I'm making my own furniture, hell, if I decide to paint my own house, the government can come in and regulate me because hey, I could have hired somebody, or they could regulate painters. So because I'm painting, I mean, it's obviously not what the framers meant when they said the federal government could regulate interstate commerce, that they can go into every home of every American and regulate everything that they do.
No, if you take a look at what the founders intended with regard to the Interstate Commerce Clause, what they were concerned about was under the Articles of Confederation, you had states oftentimes passing laws, tariffs, other regulations to prevent the free flow of goods from one state to another or to give a particular advantage to their own in-state manufacturers. And so this was intended to permit Congress to regulate, to assure the free flow of goods in between states.
Absolutely, and the intent of the framers is the law every bit as much as the written law. Because if you can change the meaning of the Constitution over time, then it has no meaning. If the Constitution means whatever people think it means, then it shouldn't even exist. It only has meaning if you put that meaning in the frame of what the founders intended. Because, over time, sometimes words change meanings. A word in 1790 could have a very different meaning than it does today, but when you're enforcing the Constitution, you have to use the dictionary that existed back then. You can't say, if words change, the law can't change. The Constitution can only change by an amendment. It can't be changed because people want to change the way they interpret it.
Certainly, we tend to advocate that the Constitution should be interpreted according to its original public meaning as it was understood at the time, and
that doesn't even mean it's interpreted. It means it's enforced. Because I always say, you don't have to interpret the Constitution. It's not written in Chinese. I mean, it means what it says. All you have to do is understand what it means. When you give somebody the ability to interpret it, see, interpretation is an opinion. People can interpret things different ways. So laws are not supposed to be interpreted. They're supposed to be enforced. Interpretation is a way to ignore a law and just substitute your own feelings, your own opinions.
Well, I mean, I understand the rhetorical point. I might not go that far insofar as obviously a court faced with a statute by a state that perhaps might limit the free flow of goods, but might not, would still have to take a look at that against the Constitution and see whether or not that violates the Commerce Clause.
Well, right, but what they're interpreting though are the facts. Do the facts violate, conflict with the Constitution? The law is clear. It's the facts. We have to how do the facts apply to the law? So that's where the interpretation comes in. But the law has to be clear because there's a basic legal principle: void for vagueness. If a law is void, is vague, then it's void. And so if the Constitution was vague and up for interpretation, then it would be void.
There's void for vagueness, and that's generally applied to statutes. It's not applied to constitutions, first of all. But
if it's applied to laws, and that's the supreme law of the land, obviously it would have to be written clearly. It can't be vague.
Well, but in terms of that, once again, let's say, for instance, what does due process mean? Due process is a term that isn't.
The founding fathers considered it's a hearing, right? Due process is a hearing before an impartial judge.
Actually, no. Once again, with regard to certain proceedings, it's not clear that a hearing was necessary. In certain cases, executive determinations was sufficient, and the founders would have clearly thought that. So, once again, due process is one of those terms. You take a look at it, and it doesn't have a clear crystal definition, and so oftentimes it does require some analysis by the courts. And in terms of the void, in terms of something like void for vagueness, there's no way a judge could say that a provision of the Constitution is void for vagueness because they derive all their authority to interpret anything from the Constitution.
They usurp their authority because they don't legally have it. They're supposed to enforce the Constitution, and they don't. Speaking of the Constitution, what do you think? Do you think the Obama administration is going to prevail, or do you think the courts will strike down Obamacare? How would you handicap it?
I think the odds are pretty good that it's going to get struck down. Every court that's looked at this question so far, including the courts that have upheld Obamacare, have noted that this is a step too far, a step further than the courts have ever gone before. This is a step further than Congress has ever gone before. Never before has Congress obligated.
All right, well, let's hope so. Let's hope
something.
they finally get one thing right after getting so many things wrong. But anyway, thank you very much for being a guest on the show today. Don't go away, everybody. We have a full hour coming up of the Peter Schiff Show on SchiffRadio.com, the gold standard in talk radio.
Got a thing for the women that don't love themselves. So either loosen up your hair or tighten up your belt.
You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on Earth.
The Peter Schiff Show is on.
Call in now. 855-4-SHIFT.
That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories,
your freedom.
The Peter Schiff Show.
Welcome back, everybody, to the second hour of the Peter Schiff Show is underway. I will be taking calls shortly at 855-4-SHIFT, 855-4-SCHIFF. Well, that gold and silver rally has fizzled. Gold is now down $1. Silver is up about a dime. We'll see what happens, but obviously we get a little profit taken on those new highs, as always tends to be the case. Nothing moves up in a straight line. Anyway, before I take some calls, I wanted to just pick up a little bit on the conversation we had with my guest, Robert Alt, who's not here anymore. But I didn't have enough time during the interview to get this in because it came up late in the half hour. But he was talking about interpretation and due process. And his point was, well, the Constitution is up for interpretation because we interpret what constitutes due process. That's not exactly correct. It is an interpretation. What we are interpreting are the facts. What judges do is say, let's assume somebody has property taken from them, and they claim that it was taken from them without due process, and they go to court and sue. And let's say the case goes before a judge. What the judge is supposed to do is take a look at the Constitution and figure out what the framers meant by due process. He doesn't interpret what due process is. It's not what he thinks it means. He has to discover what the founding fathers thought it meant. And how do you figure out, how do you know what they thought, what they would have believed constitutes due process? Well, you go back and you read the Elliott debates, which is the written record of all the deliberations and debates that they had in the Continental Congress to ratify the Constitution, so you can clearly see what each provision was supposed to mean. You can read the Federalist Papers, which is a collection of essays written by Alexander Hamilton, John Jay, another one, Madison, to try to convince New York to ratify the Constitution, and so they were explaining what the Constitution meant. So there is a record of what was in the framers' mind, because what due process is not what a current judge thinks it is, but what the founding fathers would have thought it is. So it's up to, it's up to a current judge to always look at something through the prism of the framers of the Constitution and put his own personal perceptions and beliefs aside. And he's supposed to be thinking, would the founders of the Constitution, if we had presented them with this circumstance 250 years ago, would they have considered it to be due process? And if the answer is no, then the government is wrong, or what they did was unconstitutional. You can't say, well, they wouldn't have thought so, but times have changed, and now I think so, because time doesn't change the Constitution. If you want to change the Constitution, you've got to amend it. It can't be amended on its own based on changing a culture, right, or changing views. That would render the document meaningless. But unfortunately, that is what the government wanted to do. And of course, there are very few sitting federal judges, certainly on the Supreme Court, that understand what I just said, right? And the problem is, earlier in the show, I talked about the fact that all of the economists that are in high regard and high esteem and know nothing about economics. Well, unfortunately, the same thing applies to the judiciary in this country. All these big judges and all these law professors, a lot of them know nothing about constitutional law. They have no idea the principles upon which this case was found. Now, that might not, I think Robert Alt seemed relatively competent compared to a lot of the other ones out there, but believe me, there is a lot of incompetence in the federal judiciary, and particularly at the Supreme Court level. In fact, I don't think any competent judges ever make it to the Supreme Court. I think the last one, Robert Bork, was pretty good, and so they wouldn't approve him because he actually wanted to enforce the Constitution. They don't want federal Supreme Court judges to enforce the Constitution. They want them to ignore the Constitution so that the government can do whatever the hell it wants. But, unfortunately, it's incompetence reigns supreme at every level in just about every subject. So we are in a lot of trouble as a nation. Anyway, let me go to the phones. First up is Sean in Des Moines, Iowa. Thanks for holding on.
Hey, Peter, premium member. Big fan of the radio show, and thanks for coming in day out and doing it for us. Good education.
You're welcome. Make sure and spread the word. We got to get this show on actual radio stations so more people can hear it beyond just my fan base.
Yep, I hear you. Peter, my question for you is, we talk a lot about incompetence, and I believe there's some of that certainly on the lower levels, people just, saying what they know is going to get them promoted and things. But on the upper, higher levels, do you think that it could be really more of a plan, if you will, a deliberate plan by the global elite? We've heard about a one world government. I mean, what's your thoughts on that? Could this be more than just incompetence?
Well, look, there obviously are some people that are not incompetent. They're just liars, and they just want power. And they don't care how much damage they do in pursuit of their own power. So you have a mixture. I think the majority are incompetent. But there is probably a significant minority that understand but don't care because their own goals and power and personal wealth are more important to them than the well-being of the country or any principles that they may have had before they sought public office. But I do not think there is a giant move towards global government. I mean, look how many problems they're having just unifying Europe. To try to do that on a global scale, it's just no way that would even, can you imagine, we had a global government and every country had to bail out every other country. Just, I don't think there's any political motivation to move in that direction.
Just seems like a lot of the power players, the Rockefellers, the Kissingers, and even Bush 41, it just seemed like, kind of that quiet agenda. They latch onto it a little bit. And it just seems like
I don't know how much power the Rockefellers have these days. I mean, the heyday of Standard Oil is long gone. Yeah, they still have some wealthy descendants, and they still have some. I think is there one Rockefeller still in Congress somewhere? I forget.
Yeah, I think in West Virginia,
might
Jay,
be.
but
believe me, they're not pulling any strings here. I mean,
it just seems, so foolish. Here we are, with all of these problems. The solution seems so simple. I mean, I've got an Associate of Arts degree, and I'm far from an econ major, but I can even figure this out.
That's why you understand it, because you didn't get brainwashed in a government school of Keynesianism.
I guess so, and I've just decided all I can do is all I can do, and that's put myself on my own gold standard. If the country won't do it, I'll own gold and silver myself, and here we are at all-time highs. So I appreciate all the advice. I've read the books, and like I say, premium member, so appreciate what you're doing there, Peter. Real voice in the wilderness. And by the way, just picked up Rand Paul's new book, and you're mentioned in that book, given credit for you along with his dad was one of the few out there really calling for all of this. So didn't realize you were in his new book. But
I had heard that. I haven't read the book myself. I probably will get around to it. But hey, thanks for being a premium member. Do you think it's worth it, your subscription? Is it a good value for your money?
Oh, if it was $20 a month, I'd do it. I mean, I look forward to download. I podcast the show every day, so I'm normally a day behind, but got on live today because I was having some problems.
So that means I've got some pricing power. That means, as inflation drives up my costs, one day we might have to increase the price of premium membership. But for now, we're going to hold it at these low prices, despite the depreciation of the dollar. Anyway, thank you. Don't go away. We've got more of the Peter Schiff Show coming up after the break. And hopefully Sean doesn't get arrested for terrorism for buying all that gold. Anyway, we'll be right back. Don't go away.
All through the morning rain again, the sun doesn't shine.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
Welcome back, everybody. This is Peter Schiff on the Peter Schiff Show. And during the break, again, I had the volume up on the TV, listening to CNBC, warning investors to get out of silver, to sell their silver. Don't buy silver. It's a bubble. It's about to burst. They said it might even burst as early as tomorrow. How many years have they've been saying this about silver? And in fact, the argument that they had is they were trying to decide, well, is there legitimate demand, industrial demand? Is it fundamental? Or is it just speculative money because people are worried about the dollar, worried about inflation, losing confidence in central banks, worried about fiat money? Well, if people are buying silver because they're worried about inflation, they're worried about incompetent central banks, that's a fundamental demand. Right? They made it act like if you're buying it for that reason that there's no fundamentals. It's just speculators. It's not speculators. It's people who want to preserve their wealth are making a judgment that they think that they will preserve their wealth in silver and gold more than they will in U.S. paper. Now, does it mean that everybody that's buying silver is buying it for that reason? No, there are certainly some people who are simply speculating on the price, but they are at the margin. They are not driving this rally. They may be trading this rally. They may be trying to profit from it, but the fundamentals are being driven by the loss of confidence, and rightly so, in paper money. And the more paper money that exists, gold and silver prices have to rise because it's simply a measurement of the value of that paper money. And the more money there is, the less it's worth in terms of gold and silver, and that's what you see. Now, in any short period of time, you might get a burst of speculation, you break through some key levels, and is it possible that silver can pull back? Of course. In fact, I said last week I thought we might have a correction as soon as gold finally made a new high. So maybe we will have a correction today. Maybe we'll have a correction tomorrow. I don't know. But, I think it's still more likely to go up than down, and I still think that any dip is going to get bought and that we're going to keep making new highs. And the fact that you've got so many people warning Americans not to buy silver. I mean, why don't they ever warn people not to buy stocks? Why don't they warn people not to buy U.S. Treasuries? I mean, there weren't that many warnings. They weren't warning people on television not to buy the dot-com stocks. That was a bubble. It did burst. They weren't warning people on real estate. I know, because I was the only guy on television bringing it up, and I always got laughed at. But, everybody, his brother comes on TV now and says that silver's a bubble. And, meanwhile, I bet the people who are talking about the silver bubble don't own an ounce of silver and never bought an ounce of silver, which is always, it's amazing how people who don't own any silver and can't figure out why you should buy it are trying to determine why other people are buying it. Because in their opinion, the people who are buying it are fools. Because after all, if it was a good thing, they'd be buying it too. So they have to rationalize why the market's going to crash because they weren't smart enough to get in on it, and they're still not buying it. So they don't want to say, well, gee, I'm just a moron, I'm a dummy. I don't know as much as these other people who bought silver. So they have to say, oh, it's just crazy, it's wild speculation, it's going to collapse, everybody's going to lose their money, because that's the perspective from which they're viewing it. Anyway, talking about incompetent economists, I've got some sound from CNBC yesterday. The chief economist from Barclays Capital. Here's what he had to say about the Fed and inflation. Play sound cut number 1.
We still see the inflation process, or we would describe the inflation process as firming. Our forecast has core inflation rising over the course of 2011 to 2012, but it would just be rising in line with the Fed's mandate, so something around 2% by the end of 2012. In that type of environment, we still see the Fed as wanting to remain cautious, being patient, and we don't see the first increase in the federal funds rate until the third quarter of 2012.
All right, well, first of all, where does this economist feel that the Federal Reserve has a mandate to keep core inflation at 2%? There is no such mandate. First of all, there's no mandate at all to keep even headline inflation at 2%. Their mandate is low inflation, but it doesn't state what low inflation is. Now, the Fed on its own has said, well, we're targeting inflation of under 2%, but that's not what its mandate is. The fact that it's doing that on its own doesn't mean it's got a mandate. And if there was a mandate, it's not about core, it's about headline. Because when they're supposed to maintain low inflation, it's not, well, maintain low core inflation, even if actual inflation is rising rapidly. See, the only reason that the Fed is focusing on core, because it's their belief that since the core is not going up, that what's happening in the headline number is wrong, and that the headline will eventually fall back in line with the core. That's the bet they're making. So their mandate is not to control core inflation, it's to control actual inflation. But it's their opinion that they should ignore the increase in actual inflation because the core is not confirming what the headline is showing, and it's their belief that over time that the core will win and the higher headline number is a false number, and so there's no reason to raise because inflation isn't really getting worse. The problem is what they're saying has no basis in historical fact. In fact, read the article that Michael Pinto wrote, our senior economist, and he had it on our website, Europac.net, disproving. In fact, he shows that headline inflation is, in fact, a leading indicator of core inflation. That in an inflationary cycle, the headline goes up first and the core goes up second. So it's like headline is the engine and the core is the caboose. So it's the exact opposite of what the Fed believes. So when they ignore core inflation, headline inflation ultimately gets worse, as does core inflation. Anyway, let me take a couple more calls. The number is 855-4-SCHIFF, 855-4-SCHIFF. Next on the line is Rufino calling from Orange County, California.
Hi, Peter. Thanks for taking my call. I had a question during about mining shares, specifically the ones that are dollar denominated during a hyperinflationary scenario.
Well, remember.
Well, I guess the question would.
The stocks are not denominated in dollars. Bonds are denominated in dollars. See, if you have a bond, right, it's going to be denominated in a certain currency because it pays off in that currency. But stocks can be priced in dollars, but they're not denominated in any currency. And so if the dollar loses value, right, stocks can go up because they're not, it's not promising to pay you a fixed quantity of dollars. So even though when you get your statement, and you have a gold stock, and it gives you a dollar price. Let's say you have a stock and it's $20 a share. If gold goes up, the dollar loses value, the share price should rise, unless there's some problem with the company. And it doesn't matter. So you're not in the dollar just because your assets are priced in dollars. You're out of the dollar if you're in a gold stock or if you're in an oil stock for that matter.
Okay, so it would be safe to own shares of mining companies here based here on the United States.
Yes. The risk of owning U.S. companies that are in the natural resource space, like mining companies or energy companies or agriculture, isn't the dollar. It's regulation and taxes. Since you own a U.S. company that the U.S. Congress can tax and regulate, that's your risk. Because as profits start to rise for U.S. companies, they're going to be hit with all kinds of windfalls, profit taxes. They're going to be vilified. And so I think it's dangerous to own assets here because I think there's a lot of political risk that people don't appreciate. But anyway, if that's your whole question, thanks. Otherwise, if you have something else, you can hold on over the break. This is Peter Schiff on SchiffRadio.com, the gold standard in talk radio.
Now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio, the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff. Gold and silver back into positive territory once again, but just barely. The dollar continues to be on the defensive. The euro is now kissing the 1.43 handle. We've got the New Zealand dollar now up about 78 cents in the cash market. That's as high as I've ever seen it, although the New Zealand dollar is still at a very low level relative to the Australian dollar. The Australian dollar, of course, is at a record high against the U.S. dollar since, I guess it's been trading freely since the early 1980s. Anyway, we still have open lines if you want to call, 855-4-SCHIFF. For Schiff to get on the show. Before I do, let me talk a little bit and play some sound. The rhetoric is heating up now about the battle over the budget and will the government shut down. And, of course, as I've said before, this is much ado about nothing. This is the Republicans taking a stand when there's no principle to stand for. They are arguing over a rounding error in the national debt. They're arguing over maybe $10 or $20 billion of cuts. That's it. And the Republicans are saying if we don't do something about the deficit, we're going to have a train wreck. We're going to have a disaster. We're going to have this is going to be Armageddon. They're saying all that. And then what do they propose? Nothing. The problem is if everything the Republicans are saying is true, then where are the real cuts? How can they say if we don't address the deficit, it's going to be a complete disaster and then not address it? Because the cuts that they're making don't address it. That's the hypocrisy. If you're going to stand for something, then stand for something. But don't shut down the government over nothing because you look like an idiot. If the Republicans shut down the government, they will look like idiots because there was nothing there. See, they think it's a moral victory that, we're holding a tough line. But they're not doing anything. Now, if they were really proposing huge cuts in government spending, and then they said either we get huge cuts in government spending or we're shutting down, then the shutdown would be valuable. But based on what we win if we shut down the government, if the government gets shut down over that, the Republicans will lose the publicity battle. Anyway, listen to President Obama speaking on this subject. This is cut number 2.
We can't have a my way or the highway approach to this problem, because if we start applying that approach where I've got to get 110% of everything I want or else I'm going to shut down the government, we're not going to get anything done this year. and the American people are going to be the ones that suffer.
You see, it's not their way or the highway. It's basically the president's way, because it's big deficits. If it was my way or the highway, we want 100% of what we want, we'd have a balanced budget. To accuse the Republicans of getting everything they want if they only get $50 billion in cuts is meaningless. But yet we, the Republicans, are handing this issue to the Democrats to be able to accuse them. And now they can say, look, they don't really want to cut spending. They don't really want to cut the deficit. After all, look at the huge deficit that they proposed. You know, this was the time for the Congress to stand up, for the people that were elected by the Tea Party to stand up. And I believe that most of the people who got supported by the Tea Party should not be reelected. I think we should throw those guys out and give some other Tea Party candidate a shot. We need to show congressmen that you get one strike, you get one term, and if you don't make a meaningful contribution to reducing government spending, then you're out, and we'll replace you with somebody else. Don't just rubber stamp these guys and let them come back to a second term. Also, I'll play one more cut, and I'll go back to the phones. Another economist, not knowing what he's talking about. This guy is the head of interest rate strategy at RBS. He was speaking on CNBC about when the Fed should raise rates, and listen to his typical response, cut number 3.
When is the right time for Bernanke to take his foot off the gas?
Well, he pretty much, actually, the whole Fed pretty much mapped it out in the FOMC minutes from the March meeting that were released this afternoon. And what they basically said is, you know, we expect the cost push pressures that a lot of manufacturers are talking about, and companies like Nike, you just mentioned, trying to push through price increases. As long as those don't leak into core inflation, and especially don't leak into long-term inflation expectations, I think what they'd like to do is enjoy the luxury of contained inflation and inflation expectations to allow this growth to really get on a sustained upward path. And we're not there yet.
So in other words, this guy says that as long as higher prices don't leak into the core, that we don't care. So even if the headline inflation is 10%, if it's 15%, if it's 20% a year, as long as the core is 2%, then we don't have to worry about all that inflation, which is absolutely ridiculous to say. And then what he's saying again is that, well, if the core does become a problem, we just, turn off the hot water. Well, you can't do that, right? As I said, you're not going to turn it off enough, and if you finally do, you're going to end up with frigid water. He's saying that they're going to know how to adjust it perfectly. They should have already been raising rates. He is taking the Fed's word for what they're going to do. He's not saying what they should do, because rates are too low, and it doesn't matter what the core reading is. And when he talked about cost push inflation, that's a relic of the Keynesians of the 1970s, saying that prices are rising because costs are rising, right? So that's why we have inflation. The reason prices are rising is because costs are rising. Well, why are costs rising? And they're rising for the same reason prices are rising. And costs are prices. One person's cost is someone else's price. For example, if a car manufacturer has to buy steel, the price of steel is what his cost is. But his cost is the price the steel maker gets when he sells his steel. So when the government says that inflation is caused by rising costs pushing up prices, see, it's a lie, because costs are prices. So it's really like saying prices are rising because prices are rising, which is no explanation at all. It's the same thing with the wage price spiral. They'll say, well, wages are rising and that makes prices go up. But wages are also prices. It's the price of labor. An employee sells his labor to his employer, and he sells it at a price. That price is his employer's cost, but it's the price the worker charges. So to say that rising wages are caused by rising prices is like saying that rising prices are caused by rising prices. And you can't define something with itself. You can't just say it's caused by itself. It's all the things. Prices, whether they're costs or whether they're expressed as wages, all those prices arise because the government's printing money. And that's what the Federal Reserve has been doing. They got the presses on overdrive. QE2 is monetization, and that's massive inflation, and that's why all these prices are going up. And these guys on television, these economists at Wall Street and Washington, are clueless. The question is, when are they all going to finally be completely discredited for the incompetence that they are? Because eventually they will be. Anyway, let me go to the phones. Next up is David calling from Indiana.
Yeah, Peter, thanks for having me on the program. How are you doing?
I'm good, and thanks for listening and calling in.
Great. Well, I am a graduate student, and I did the novel activity of actually saving ahead of time for my education and spending out of my savings while I'm in school. And I have a quick question about wealth preservation. I'm not looking to get a big return on my portfolio, but just to maintain some semblance of wealth in it as I go through my graduate program. I have some money in silver and gold, and I'm trying to get my money out of the U.S. dollar. And I was wondering what currencies you would suggest to put money into, if there are any fiat currencies that are relatively stable.
Yeah,
and
I
what
mean,
they would be.
It's all about like monetary triage. It's a lesser of the various evils. Now, you obviously have a very short time horizon. How long are you anticipating making these tuition payments? How many years?
Probably another year and a half to 2 years.
Yeah, so you have a very short time horizon, so it's hard to invest with a short window. But if you just want to go to currencies that are kind of not as volatile, like pick a Canadian dollar, for example. I think that's probably not a bad currency to hang out in for a year and a half if you're in the U.S. and you're worried. There is a chance, of course, that the Canadian dollar could fall, and then, of course, that would make it harder for you to pay your tuition. But I think the odds are much higher that the Canadian dollar will continue to rise, as will many other currencies, which will end up making it cheaper. But again, whatever you're doing, when you only have a year and a half time horizon, it's pretty much of a speculation either way. You decide what you're comfortable with and then make your choice. But anyway, thanks for the call. Don't go away.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million.
Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back to the final segment of the Peter Schiff Show. This is Peter Schiff, and let me play some sound from Nancy Pelosi, House Minority Leader in the Congress. Listen to the rhetoric. Listen to how she is characterizing the minute cuts that the Republicans are proposing to the federal budget for fiscal 2011. Take a listen. This is cut number 4.
In one of the bills before us, 6 million seniors are deprived of meals. Homebound seniors are deprived of meals. People ask us to find our common ground, the middle ground. Is middle ground 3 million seniors not receiving meals? I don't think so. We've got to take this conversation from a debate about numbers and dollar figures and finding middle ground there, to the higher ground of national values. I don't think the American people want any one of those 6 million people to lose their meals.
So in other words, the Democrats are accusing the Republicans of wanting to starve senior citizens. Now imagine what they would say if they actually were proposing real cuts in Medicare and Social Security. I mean, if the rhetoric is this hot and this intense over nothing, over cuts that do nothing to solve the problem, that don't tackle entitlements at all. And if this is the kind of divisive rhetoric that we get, how do we have any hope at all of veering from this tragic course that our nation is set upon? None. There is no hope. All you can do is protect yourself, right? All you can do is get out of the dollar, buy your gold and silver, buy foreign currencies, buy foreign stocks, do what you can. Because this is going to be a train wreck, and you don't want to be aboard that train. Hopefully, we'll still be able to preserve some of our civil rights, and that we won't end up wishing we had not just got our money out of the country, but our bodies too, that we had fled the country. I hope it doesn't get that bad. I know we're going to have a monetary and financial and economic collapse, but I hope that we don't have the complete cultural collapse where we transform our nation and we go much more towards a totalitarian, centrally planned police state model, because that is the worst case scenario. It's not impossible, but given the severity of this downturn, I wouldn't put it past the government. Anyway, let me go back to the phones. Next up is Casey calling from the Haven, Connecticut. How you doing, Casey?
Hi.
How are you?
Thanks for taking my call. Can you hear me?
Loud and clear.
Hi. I read an interesting article online today where the writer claims that he thinks that there's a China bubble, basically because right now art is going for record prices in Sotheby's for Chinese clients, and there's an unusually large number of skyscrapers being built, et cetera, et cetera. And I know you're very bullish on China, and I can certainly understand why. But basically, it also seemed to make sense to me that since China has all this inflation that they're essentially taking from us, and you said that inflation causes people to make bad business decisions, maybe building, too many buildings without enough tenants, for example. Do you think that before China can go up, it has to crash and get rid of, purge maybe some of these bad investments, or do you think it's going to be able to make a smooth transition?
Well, I don't know about a crash, but I do believe that there are mispriced assets and misallocated resources in China, and that is going to have to be corrected. And so China will go through a downturn at some point. How severe it depends on the government's reaction. And, of course, the longer they continue to create inflation to prop up the U.S. economy, the bigger that correction ultimately will be because the more mistakes will be made. Now, a lot of the overbuilding, too, is being done by the Chinese government. And from my perspective, they're simply using money that they would have put into treasuries. So, buying buildings, even if nobody is occupying them, is better than holding additional U.S. treasuries. So to the extent that they spend their treasuries on something rather than nothing, I think they're better off. I think the worst thing that they would do is just hoard more and more U.S. treasuries. So to the extent that some of this building is diminishing the treasuries that they own, then even if the buildings lose value, they're going to lose less value than those treasuries. But yeah, I mean, the Chinese economy would be even better if the government wasn't doing this. And despite all this money printing over the last 10 years or so, the cost of living in China has still fallen for most people. Prices have fallen. They would have fallen a lot more had the government not robbed their citizens of their purchasing power through inflation. And that deflation, falling prices, right, would have benefited the Chinese citizens immensely. And instead, they were denied that benefit because the government thought it was more important for Americans to be able to have consumer goods than their own citizens.
Mm-hmm. So when this kind of shift hopefully eventually happens in China, do you think that then sort of consumer service type industries will pick up in China at the expense of exporters?
Absolutely. And when I'm making investments in China for myself, for clients, that is the way we look at it. I'm looking to buy stocks that are generating revenues from Chinese consumers. And I'm avoiding the sectors that I think have been artificially bid up by inflation. And instead, I'm trying to position myself to benefit from the long-term transition from exporting to consuming. And as the Chinese consume their own production, which is perfectly fine, as opposed to shipping it across the Pacific, the Chinese are going to be richer, their savings will be worth more, their wages will be worth more. So anybody who has Chinese customers is going to make more money. And that's what I want. I want access to the Chinese customer. Because once they stop propping up the dollar, and they have to eventually, you can't fool all the Chinese all the time. Eventually, they will come to the right decision. Maybe it's taken longer than you would think. But eventually, they're going to stop themselves out of this trade. Right? They are going to cut. They're going to take their losses and they're going to run. And then there's going to be a boom, a real it's going to be kind of like the end of the Second World War. It's going to be a boom for China. Yes, there's going to be some initial problems with some allocations. Some companies might go bankrupt. Some people might lose money. But it is going to launch, I think, a real economic boom in China. And I want to participate in that. I want to be there to profit from that. And I think the people that understand this, that make the investments now, I think they'll be there to profit from that transition. Now, if I'm wrong, I'm wrong. And then, maybe there won't be profits. That's what investing is all about. You're making a bet on the future, right? You're trying to pick the trends in the future. And some people might think things differently than I do. Obviously, a lot of people do.
Okay, great. Thanks for taking my call.
Thanks for calling. Next up is Cole calling from California.
Sir, can you hear me?
Yes, loud and clear.
Mr. Schiff, I just wanted to really thank you for going out of your way to help people. I really appreciate it.
Well, thank you. And, in many ways, though, I help people and I help myself, or by help because, I do provide services. I do provide investment services. I sell precious metals. I do a lot of things. So educating people to understand the problems to the extent that they then become customers, I benefit too. So it's not all altruism, although I do a lot of stuff where I know that there is not necessarily a monetary payback. I mean, there are some things I do, but by and large, my business does improve based on Americans understanding how grave these threats are, because if they understand it, they might do something about it, and if they do something about it, they might use one of my businesses.
I know we appreciate it. I just wanted to comment, and then I had a question. I'll make it brief. Yesterday, Alex Jones, I believe it was yesterday, he said that Toyota has more plants in the United States than General Motors does. And I found that interesting.
I wouldn't doubt. I mean, I don't know for a fact because I don't know how many plants they have, but I wouldn't be surprised if that was the case. And, one thing I want to mention, too, the fact that I may be motivated by self-interest, I'm helping a lot of people. That's the beauty of capitalism. That's the way it works. I'm getting valuable information out there, and the people who do become clients are getting a valuable service. So this is, you don't have to be motivated by altruism to help people. You can be motivated by money and help people. And in fact, money is one of the best motivators, and that's been proven time and time again.
Through that. I believe, I know that you've said that we're exporting inflation to China, and do you see that coming to an end
yes.
pretty soon here?
Eventually, yes, and all that inflation is going to come back to us like a giant tsunami. It is going to happen, and they're going to say we're importing it from China, but we're not. We're getting our own inflation back. It's our own chickens coming home to roost. Anyway, we're out of time for today's show. We'll be back again tomorrow for another episode of the Peter Schiff Show on SchiffRadio.com, the gold standard in talk radio.